Ashish, how do you see the PSU pack? You've mentioned actually the four stocks that you've mentioned: NTPC, BEL, Garden Reach, and Cochin Shipyard. All of them are from the PSU pack. But how is the overall health of these stocks?
So I think we need to look into this as a relative strength as a concept, and I believe in a volatile market, these stocks have been consistently showing very strong uptrend, whether it's PSU banks or whether it's CPSC ETF or something related to power and defense. There we have seen a very consistent moves coming into the market, and what we understand is because the size of opportunity in this space is really big. So if I speak about let's say defense as a basket, then it's a 10 lakh crore kind of opportunity which we are going to witness in next 4 to 5 years time frame. And if you look at book to bill ratio of most of the defense companies, it is in a range of 5 times to 10 times. So when we speak about Cochin Shipyard or Garden Reach or Majgaon, there the book to bill ratio is almost 10 times. So which means that if the revenue is almost 2,000 crore, their order book is close to 20,000 crores. In case of some of the PSU defense companies, that is almost 5 times. And we also need to understand, because of the monopolistic kind of business these companies do, and with size of opportunity at such a large scale, and because of indigenization almost hitting almost 90-91% in some of the cases like Bharat Dynamics, the operating margins are significantly higher. So for a PSU company, making operating margin of close to 20-21% is something which will keep the stocks in a strong trend, and that is getting reflected into the price behavior as well. So that's a sense from the entire defense basket. I think these are the names which we continue to like it. As far as PSU banks are concerned, what we need to understand is the credit to deposit ratio of most of these banks are in a very comfortable zone. What we are observing is the net NPA numbers below 1%, and the NIMs trading almost around 3.5%, gives us a lot of comfort with a valuation of almost 1.1 time forward price to book. So this is the reason why we don't see that, because of the risk which is emanating in the market, these stocks are not going to see some sharper correction. In fact, if there is any dip, I think stocks like SBI, Bank of Baroda, Canara Bank, they would be my preferred bets on any dips. And as a disclosure, most of these stocks which we have discussed, we continue to hold in our portfolio. My preferred bet would be PSU Bank V CTF, which is trading around 78. My sense is 73 is a strong support, and I believe this ETF itself should be traded in a three-digit mark in coming few months.